Hey guys, Chart Stoppers back with another video. In this channel we take a look at different stocks and map out their key support and resistance areas on their chart. It's important to know these areas before buying any stock, and it's also important to know what kind of a trend a stock is in before you buy into it. Support and resistance is one of the most important things you should know about a stock before you either buy or sell. Also, if you're doing any day trading, swing trading, or options, you're definitely going to want to get familiar with support and resistance. Just to let you know, I am not a financial expert. These videos are for educational purposes only, but I am here to point out key factors on the charts which do impact the price action of a stock. I also provided a link in the description for Webull. You could use it to start an account and get 2 free stocks. I also provided a link for Robinhood. You could use that to start an account and get 1 free stock. Also, just to let you know, we will be doing 3 videos per week on 3 different stocks. So if you have a recommendation, leave a comment below and I will try to get to it. Also, don't forget to subscribe to the channel and hit that notification button so you don't miss any videos. Okay, so let's get into the stock market today. Let's take a look at it. Today is March 18th, 2021. The Dow is actually up today, 0.35%. The S&P 500 is down 0.58%. And the NASDAQ is taking a big hit today. It's down 1.72%. That is because of the rising bond yield on the 10-year note. It is all the way up to 1.75% on the high today. We saw yesterday Jerome Powell came out and made a few comments, putting the market at ease yesterday. But today the bond market is not trusting his comments, and the bond yields are going crazy. So the NASDAQ is selling off, but the Dow is up and the S&P is down a little bit. So let's take a look at what we're going to get into today. We're looking at Netflix. I'm doing an update on a video I did earlier. If you guys haven't looked at it, I will provide a link in the upper right-hand corner of the screen. You should see that now. Go take a look at that video. You will see how I mapped out my chart right here. I already have my chart mapped out. I have all the support and resistance mapped out here. So you'll be able to see how I got to this point. Okay, so taking a look at Netflix today, it's trading at $509.80. It's down $14.64, and that's 2.79% today. It's down. Let's take a look at the chart here. You could see that the high of our chart is $593.29. I have that mapped out as a high of our chart at 590. That'll be our high resistance point that we're looking for this stock to break through at 590. When it gets up to here, we'll be looking for it to break through that 590 and retest that all-time high. But as you could see, it hit that all-time high and it has come down dramatically. You could see when it hit that was in January, it was in the middle of January 20th, and ever since it hit that all-time high, it has come down almost $100 since then. It's trading at $509 right now. So almost about an $85 difference as to where we're trading at right now. So that's a big drop in price, as you could see from the all-time high. But we'll take a look at how we got here. Let's see here. On January 20th, we hit the all-time high, and then we saw a big trade-off here. That was on a big earnings report that they came out in the beginning of the year. We've seen numbers coming up because of COVID. A lot of people signed up for Netflix because they were stuck in their houses during the pandemic. So that's why we saw a lot of people signing up for Netflix, and their numbers and their revenue just exploded through the roof last year. So that's why this stock, exploded. But as you could see here, it's really pretty much been trading sideways since July of last year. I'd like to point out on the chart here, I think it's, July 9th right here. You could see if you would have bought this on July 9th, you would have bought it for the same price that it's trading at today. So on July 9th of last year, it was trading at the same price as today. So that's the definition of trading sideways. So even though they've had great numbers, the stock really hasn't done much since the summer of last year. We saw it have that big run up to almost $600, but since then it has fallen down and hasn't done much. So you could see here on the chart that once we hit that high, we had our resistance level of 560 right here. It was our former resistance, but that was our support. That easily got broken down as the price just fell after that great earnings report here. You could see it fell all the way down to our next support level and dropped all the way through there, which was 540. That was our next support, and we lost that one on a big sell-off right here. And we almost lost our next support, which was 520, but it did recover a little bit on that day. So after that, we saw a little bit of a recovery, and then we saw once the correction started, this thing, it did kind of well during the correction. It held its ground a little bit until we got to March 3rd right here, and then it started selling off a little bit. So we reached our 520 support, and then we lost that support level, and it ultimately ended up testing this 500 support level, which was actually around the 200-day moving average. As you can see right here on the 8th, it broke that 200-day moving average, and it closed below that 200-day moving average, and it actually closed below our $500 support line too. So if it would have kept dropping, I had my next support level for this one marked down at $480. That was our next support level, and then if it kept dropping after that, we would see our next support level down here at $460. But we didn't have to worry about that because our $500 support line did hold up on the next day. On the 9th, it did recover, and it's been on a little bit of an uptrend since then, but we saw here on the 16th, which was 2 days ago, it tested that 50-day moving average, and it could not break through there. And we're going to see that as our resistance point right now because we saw it try to break through that 50-day moving average, and that's going to act as resistance now because as it hit that, it bounced off of that, and it ended up closing lower on the day, and now it is on a downtrend, you could see. So it looks to me that it's going to trade in between this 50-day moving average and the 200-day moving average, acting as support and resistance. I think it's going to stay there for a little bit until we get out of the woods with this 10-year yield. Everybody is kind of, skittish on trading right now with these tech stocks because they don't know what this 10-year yield's going to do. I think as it gets closer to 2% and it finds that level where it's going to top off at, I think that's when everyone will probably get back into these big-name tech stocks. So until then, I think we're just going to see it trade sideways in between this 500, maybe 520, possibly all the way up to 540. But I don't think we're going to see it break that 540 level until we see this 10-year bond level off. So that's how I would be trading this. I would be buying around the 500 area and selling anywhere from 520 to around the 50-day moving average. I would be watching that as it goes. So that's my update on Netflix. Hope you guys liked the video. If you did, make sure you hit that like button. And don't forget to subscribe to the channel and hit that notification button so you don't miss out on any new content. And we will see you next time on Chart Stoppers.